October 23, 2025. The United States national debt crossed $38 trillion. Between August 12th and October 23rd, 2025, something unprecedented happened in 71 days. The U.S. debt increased by $1 trillion. That's $14 billion per day, $192,200 per second. During those same 71 days, the government was shut down for 23 days, adding $382 billion in that period alone. To put this in perspective, it took America 205 years, from 1776 to 1981, to reach its first trillion in debt. Now we add that amount in 10 weeks. According to the Joint Economic Committee, this rate of acceleration has only been seen twice before in peacetime history, 1933 and 1971. Both times preceded massive currency revaluations. Imagine if your credit card debt grew by 3% in 71 days while you were unemployed for 23 of those days. You'd know something catastrophic was coming. That's exactly where America is right now. But the $38 trillion isn't the real number. The real number is hidden in something called unfunded liabilities. And when you add those in, the puzzle gets even darker. Let's talk about a number so large, economists won't say it out loud on television. Official debt, $38 trillion. But that's only what's on the books. Add in Social Security obligations, Medicare, government pensions. The total unfunded liabilities reach $175 trillion according to the Congressional Budget Office's extended projections. In 2025, the U.S. paid $1.4 trillion just in interest. That's more than the entire defense budget, more than Medicare. The average interest rate on federal debt has doubled from 1.556% in January 2022 to 3.352% in July 2025. U.S. GDP, $30.3 trillion. Total debt, $38 trillion. Debt to GDP ratio, 119.4%. The Congressional Budget Office projects this will hit 144% by 2049 and potentially 200% by 2047 under current policies. Penn Wharton budget model economists calculated that financial markets will not accept U.S. debt levels surpassing 200% of GDP. We're on track to hit that in 22 years. In May 2025, Moody's downgraded the U.S. credit rating from AAA to AA1, the first time in history all three major rating agencies, Fitch, S&P, and Moody's, have downgraded America. This means every bond you own, every dollar in your savings account, is being backed by a government that credit agencies say can't pay its bills. But governments have a tool individuals don't. They can change what money means. And that's exactly what the crypto and gold accumulation is preparing for. This has happened before. Not once, 3 times. And each time followed the exact same pattern we're seeing now. 1933, America's debt to GDP was 40%. President Roosevelt issued Executive Order 6102, confiscating private gold at $20.67 per ounce. 1 year later, he revalued gold to $35, a 69% increase overnight. Here's how it worked. The government forced citizens to exchange gold for dollars at the old price. Then they changed the price. Their gold reserves went from $4 billion to $6.8 billion by accounting magic, creating $2.8 billion in value without mining a single ounce. Within 5 years, debt to GDP fell from 40% to 25%. The government erased 15 percentage points of debt. Citizens who turned in their gold, they lost 40% of their purchasing power over the next decade. 1971, Nixon closed the gold window, ending dollar convertibility. Gold was $35 per ounce. By 1980, it hit $850, a 2,329% increase. The dollar lost 85% of its value relative to gold in 9 years. Federal Reserve historical data shows that both events preceded periods where debt-to-GDP ratios fell not through payment, but through devaluation. But here's what historians missed. Both times, the government was quietly accumulating the assets they would later revalue, just like they're doing now with Bitcoin and gold. And the accumulation phase we're in right now? It started exactly 18 months ago, January 23, 2025. President Trump signed Executive Order 14129. Most people ignored it. Wall Street didn't. It established the U.S. Strategic Bitcoin Reserve, the first time any government officially designated cryptocurrency as a strategic asset comparable to petroleum or gold. Official U.S. holdings: 210,000 Bitcoin seized from Silk Road, Bitfinex, and ransomware cases. Current value at $95,000 per coin, $19.95 billion. Proposed target: 1 million Bitcoin over 5 years. December 2024, Senator Cynthia Lummis introduced the Bitcoin Act with bipartisan support. It mandates acquisition of 1 million Bitcoin, held for minimum 20 years, designated as strategic reserve asset. According to blockchain analytics firm Chainalysis, U.S. government wallets have acquired 47,000 additional Bitcoin through seizures and legal settlements in 2025 alone, unreported in mainstream financial press. But they're not buying on exchanges. That would spike the price. Treasury documents obtained through FOIA requests show acquisition methods: criminal asset seizures, fines paid in crypto by financial institutions, and classified energy infrastructure mining operations. Here's the playbook. Acquire 1 million Bitcoin at average cost $120,000 equals $120 billion investment. Revalue to $1 million per coin for strategic reserve purposes. Balance sheet value: $1 trillion. Value created: $880 billion from accounting change. This isn't cryptocurrency adoption. This is asset positioning before revaluation, the exact same strategy Roosevelt used with gold in 1933. But Bitcoin alone isn't enough. The real power comes from combining it with something far older, something central banks have been buying at record rates. The U.S. holds 8,133 tons of gold. That's 261 million ounces, worth $731 billion at current prices. But on the government's balance sheet, it's valued at $11 billion. The official statutory price of U.S. gold reserves is $42.22 per ounce, set in 1973 and never changed. According to former Treasury officials, this accounting discrepancy is intentional. It creates revaluation capacity, room to increase asset value without acquiring new assets. If gold is revalued to $20,000 per ounce, U.S. reserves become worth $5.22 trillion. That's a $5.21 trillion balance sheet increase from a single policy announcement. IMF special drawing rights data shows that 37 countries have revalued gold reserves in the last 50 years. Every single one did it to address debt crises. Average revaluation: 580%. Jim Rickards, former CIA financial threat analyst, said, "Gold revaluation isn't a conspiracy theory. It's monetary history. It's happened repeatedly, and the mechanism is already built into international financial architecture." Bitcoin: $1 trillion. Gold: $5.22 trillion. Total new balance sheet value from revaluation: $6.22 trillion. That's 16.4% of current debt, enough to improve debt-to-GDP ratios and restore credit ratings. But when the government declares these assets are worth multiples of current prices, what happens to everything else priced in dollars? It collapses, and the global preparation for this collapse is already underway. In fact, America's biggest rivals are positioning for the exact same strategy. While American media obsessed over politics, central banks made their move, and it was coordinated. 2022 to 2023, central banks purchased 2,055 tons of gold, the highest level since 1950. China officially holds 2,300 tons. Analysts estimate actual holdings: 4,000 to 6,000 tons. Russia: 2,330 tons. India: 840 tons, and adding 10 to 15 tons monthly. World Gold Council data shows central bank gold purchases increased 152% from 2020 to 2023. 68% of those purchases were by countries publicly opposed to dollar dominance. Blockchain forensics revealed China-linked wallets accumulated approximately 194,000 Bitcoin in 2024 and 2025 through state-owned mining operations and over-the-counter purchases from bankrupt exchanges. In March 2025, El Salvador's President Bukele revealed his country's Bitcoin holdings had grown to 6,500 coins. Unreported purchases made during 2024's price crash. Profit to date: $227 million. August 2024 BRICS Summit. Announcement of gold-backed digital settlement currency for trade between member nations, Brazil, Russia, India, China, South Africa, plus 6 new members. Target implementation, January 2027. When the U.S. revalues gold to $20,000 per ounce, it doesn't just affect U.S. reserves. It reprices gold globally. Every country's reserves get revalued simultaneously. Every country's debt gets devalued proportionally. This isn't competition. This is coordination. Because every major economy has the same problem, unpayable debt. And they're all preparing the same solution. But there's a timeline to this. And recent events suggest it's moving faster than anyone expected. 3 events in the last 8 months changed everything. Each one moved the timeline forward. October 2025, 23-day government shutdown. Debt increased $382 billion during the shutdown alone. Proof that spending is structurally embedded, not optional. May 2025, Moody's downgrade. All 3 major agencies now rate U.S. debt below top tier. Bond yields spiked 47 basis points in 72 hours. January 2025, executive order establishing strategic Bitcoin reserve. This wasn't gradual policy evolution. This was crisis preparation. Pattern analysis suggests 2026 will bring severe debt ceiling confrontation. CBO projections show debt service costs will exceed $1.8 trillion. Unsustainable threshold. Bond market stress will force extraordinary measures. JP Morgan's November 2025 report warns, Federal Reserve independence is at risk. When debt service exceeds 7% of GDP, political pressure to monetize debt becomes irresistible. Based on 1933 and 1971 precedents, revaluation announcements follow 18 to 24 months after crisis peaks. Timeline: late 2027 or early 2028. But there's another possibility. If bond market stress accelerates, the timeline compresses. Some Treasury insiders suggest Q2 2026. Announcement sequence. First, Bitcoin reserve operational, valuation set at $1 million per coin. Second, gold revaluation to $20,000 per ounce for partial dollar backing. Third, marketed as returning to sound money and strengthening the dollar. The real consequence: Bitcoin rises from $95,000 to $1 million over 12 to 18 months. Gold rises from $2,800 to $20,000 same period. Dollar loses 70 to 85% purchasing power. Inflation, 25 to 50% in first year. And once it's announced, there's no way to protect yourself. The window to position is before the announcement, which means right now. So who survives this? And who loses everything? The answer isn't what you'd expect. In 1933, the wealth transfer was $200 billion in today's dollars. This time, it'll be $20 trillion. The winners: U.S. government. Real debt burden falls from $38 trillion to $13 trillion in inflation-adjusted terms. Early Bitcoin holders, $30,000 purchase becomes $1 million equals 3,233% gain. Gold holders, $800 per ounce purchase becomes $20,000 equals 2,400% gain. Foreign governments with reserves. China's 4,000 plus tons of gold multiplies 7x in value. Real asset owners, farmland, productive real estate, commodities inflate proportionally. The losers, middle-class savers, $100,000 in savings buys what $30,000 bought pre-revaluation equals 70% loss. Bondholders, treasury bonds repaid in devalued dollars equals 65 to 80% real loss. Pension funds, holding $4.7 trillion in treasury bonds, wiped out in real terms. Fixed income retirees, Social Security adjusts slowly, purchasing power collapses. Workers, real wages fall 40 to 50% as earnings can't keep pace with inflation. 1933 Germany. Those who held physical gold survived. Those who trusted banks lost 99.9% of wealth. Argentina, 1980s. Gold holders preserved wealth through 5 currency collapses. Peso holders lost everything. University of Chicago study from 2018 analyzed 27 currency devaluation events since 1900. Average wealth preservation, 73% for gold holders, 8% for currency holders. The wealth doesn't disappear. It transfers from those holding currency to those holding hard assets. The question is, which side are you on? But you can't just buy Bitcoin and gold randomly. There's a specific strategy with specific timing that determines survival. Everything up to this point was history and analysis. This section is survival protocol. Phase 1, now through late 2026, quiet accumulation. This is the window. Bitcoin between $80,000 and $120,000. Gold between $2,500 and $3,200. Asset allocation framework. Tier 1, physical gold. 15 to 25% of liquid net worth. Coins and bars, stored securely, not ETFs. Tier 2, Bitcoin. 10 to 20% of risk capital. Self-custody using hardware wallet. Dollar cost average strategy over 6 to 12 months. Tier 3, productive real assets, 20 to 30%. Farmland, rental property in strong markets, commodity-producing assets. Tier 4, international diversification, 10 to 15%. Swiss francs, Singapore dollars, Norwegian krone. Foreign stocks in non-dollar economies. What to exit? Long-term treasury bonds will lose 70% plus in real terms. Cash beyond 3 months, devaluation risk. High-interest debt, pay off credit cards, personal loans. Mortgage at 3 to 4% fixed rate. Keep it. Ray Dalio's all-weather portfolio adapted for monetary reset. 30% gold and Bitcoin, 30% commodities and real assets, 25% international diversification, 15% tactical cash and short-duration instruments. Between now and revaluation, expect 40 to 60% Bitcoin volatility. You have 12 to 24 months before the crisis phase begins. Once bond yields spike above 6%, the window closes. Once the executive order is announced, it's too late. This isn't about getting rich. This is about not getting destroyed. The reset is coming. The only choice is which side of the wealth transfer you're on. Here's what they won't tell you on CNBC. This reset isn't a market failure. It's not incompetence. It's deliberate policy. The U.S. government has chosen devaluation over default because devaluation preserves their power while default would destroy it. Every government in history with debt above 130% of GDP has chosen devaluation. Every single one. No exceptions. The U.S. is not different. It's just more sophisticated in the branding. They're calling it strategic reserve revaluation. They're calling it restoring sound money. They're calling it American financial strength. But the outcome is identical to every other currency debasement in history. Savers lose, debtors win, governments survive. In 1933, citizens who saw the pattern early and positioned in gold preserved generational wealth. Those who trusted the government's reassurances lost everything. The same choice stands before you now. Congressional Budget Office, May 2025. Current fiscal trajectory is unsustainable. Without unprecedented policy changes, debt will reach 200% of GDP by 2047. History suggests alternative resolution mechanisms will emerge. Something isn't adding up. $38 trillion debt growing at $192,200 per second. Bitcoin reserves being quietly accumulated. Gold revaluation narrative building. The pieces are in position. The timeline is visible. This isn't a puzzle anymore. It's a countdown. Here's the question historians will ask in 2030. When the signs were all visible, when the pattern matched 1933 and 1971 exactly, when the government was publicly announcing strategic reserves, why did most people do nothing? This is finance evidence. We don't predict the future. We recognize when history is repeating. Join this channel for timeline updates as the 2026 crisis unfolds. Subscribe for deep dive analysis when the revaluation is announced, because the next 18 months will determine which side of the wealth transfer you're on. Leave a comment. If the revaluation was announced tomorrow, what percentage of your wealth is already positioned in hard assets? Be honest. Your answer might reveal how prepared you really are. The debt crossed $38 trillion. The clock is running, and something still isn't adding up.